Yes, very good morning. Yes, sir. Very good morning to all of you. Please check it out whether audio and video is clear or not. Then we can start our discussion with the amendments. Yes, please give me confirmation about audio and video. Yes. So now for December 2025, we have some amendments. Sir, if you observe that, maybe you can follow version 3 or version 4 books. Okay, some of you may be following version 3, version 4, one and the same, but color format only different. But sir, these are the books are released for June 25 and December 25 exams. Okay. Some amendments are already covered in that books only. But after that, for first time, they released an amendments for especially December 25. That means some notifications, CBDT circulars, etc. So they given some amendments. So now I am covering the amendments, whatever we are not discussed in our regular classes as well as EO batch, which is not covered in our material also. Yes, again I am saying June 25, December 25 Finance Act 2024 amendments are already covered. Some extra amendments are released for December 25. Now we are going to discuss that amendments only. Sir, how many pages, sir? 12 pages only. We'll discuss everything within 1 to 2 hours time along with the examples. Okay. The major amendment is safe harbor rules. In transfer pricing chapter, we have an amendment, safe harbor rules. And everything I compiled in a simplified form, one by one, we can discuss, ma'am. Are you clear? So if you are saying okay, then I can start the discussion related to, yes. And students can ask, sir, other amendments also there, sir. Yes, there already I inserted in that material in regular and EVO classes are already covered. Whatever are not covered, because they are released at a late manner after printing our books and after completion of regular batches. And one more thing, tax audit also new chapter. They given at the time of, I think in the July month or August month, they released the tax audit. So tax audit also, I given separate material and separate class also uploaded on YouTube. Clear? These are the resources you have to follow. If you are following version 3, version 4, yes, workbook, concept book, handwritten, enough. Along with that, you have to read tax audit chapter. Along with that, you have to prepare these amendments also. Done? Yeah. First, amendment first number. This is from PCBP chapter. This is from which chapter, ma? PCBP. So section 37 is talking about the general deduction. What is that, ma? General deduction. Section 37 is talking about the general deductions. Okay. So here, general deduction means nothing but what, ma? It is an expenditure. Upon satisfaction of some conditions, you can take it as a deduction. First, revenue expenditure. It is related to business or profession. Yes. and it need not be a capital expenditure. It need not be related to breach of law or penalties, prosecution, etc. If all the conditions are satisfied, this amount we can give it as deduction. But in notification, government clearly saying one of the expenditure is disallowed. Allowed or disallowed? Disallowed. What is that expenditure, ma? Generally, please remember these 4 acts are already you know. SEBI, SCARA, that is Security Contract Regulations, Depositors Act, Competition Act. Under these 4 acts, if any default committed by SSC, if any default committed by SSC, for this default, you have to pay some amount for settling the dispute. Yes, ma? One amount you incurred, for settling the dispute. For settling dispute. So now, this is an expenditure only, but you can't take it as deduction under which section, ma? 37. Why? Simply you are violated some laws and regulations for settling that proceedings. If you are paying any amount that cannot be treated as deduction under the head what? PZBP. That means you have to remember these 4 laws. What are that? SEBI, SCARA, Depositories, Competition. Clear? PZBP amendment, this is only done. Next, Second Amendment. Second Amendment. Read the section, ma? 44 BBC. What is it 44 BBC? In non-resident chapter, we have this section. Recently, Finance Act 2024 introduced this section. If any non-resident engaged in the operating of cruise ship business, they can declare the profits based on the presumptive taxation under section 44 BBC. Okay. If you are observing that, our concept book page number 303 clearly I given the 44 BBC. So non-resident shipping business, generally which section will apply, ma? 44B will apply. If you are doing the just shipping business, 44B. But one ship excluded from the scope of 44B, what is a ship, ma? Cruise ship. So for cruise ships, what is that presumptive taxation provision, ma? 44BBA. Simply, what is that? 44 BBC. What is a presumptive income we have to declare, ma? On amount 20%. Simply luxury category. Cruise ship means nothing but what, ma? Luxury category ships only. For traveling within that ship, many facilities will be there, hotel and in many hotel and accommodation also, and you can simply enjoy everything in that ship only. That's why that is a luxury category. That's why they are asking how much amount you have to declare, ma? 20% of that freight amount as an presumptive income. But normal ships, what is that? 7.5%. These provisions already we know, but what is that amendment? Yes, clearly. What is that amendment, ma? They are saying 44 BBC provides the presumptive taxation of income for non-resident who are engaged in the business of which ships? Cruise ships. Now they are introducing one rule, that rule 6GB. I don't try to remember that rules also, but okay, they inserted this rule. That's why for this attempt, this rule may be important. Whatever amendments material containing the rule number, try to remember. Rule 6GB specifying the conditions for such a non-resident must fulfill. That means if any non-resident wants to declare the income related to cruise ships under this section, they are required to satisfy the rule number what 60. What are the conditions? Simply, they are given the conditions for the cruise ship. So, what is it measurement and what is it passenger capacity and how to travel? That all the conditions they are given. You have to remember. The first requirement they are given, passenger ship requirement. Can you tell me capacity at least how much ma? 200. Or just 10 members ship is there. Can you call it as a cruise ship? No. Minimum 200. And length how many meters? Minimum 75 meters. Next, ship must be used for leisure and recreational purpose and suitable dining and cabin facilities. So nothing but touring purposes we have to use. In that ship we need to enjoy some amenities like what ma? Dining as well as cabin. OS requirement. OS means nothing but what ma? Ship. Simply operate on a schedule voyage or shore execution. Nothing but what ma? Yes, where to travel also there is a scheduled trips. Yes, at least 2 seaports of India and touches the same seaport of India what are twice. Suppose Kolkata to Chennai, Chennai to Kochi. So if that is travel from how many seaports ma? 2. So it touches the same seaport of an India how many times ra? Twice. Next one. Purpose of operation. Can you tell me purpose of operation? Carriage of passengers or carriage of goods ra? Carriage of passengers. A cruise ship means humans can enjoy ra, not goods. Okay. Next. Regulatory compliance. Yes, must operated within the procedure and guidelines issued by the Ministry of Tourism or Ministry of Shipping guidelines, whatever given, that all the guidelines they are required to be satisfied. If all these rule 6GB conditions are satisfied, then only they can declare the profits at the rate of what? 20%. Sir, previously they given this and now they are inserted as an amendment what? Rule 6GB into our syllabus. Rule 6GB earlier also there, but they are inserted into our syllabus. Understood? What is the passenger capacity? 200. What is the ship meters length? 75. Can you tell me recreational purpose we need to use? What are the facilities we can enjoy? Dining as well as cabin facilities. How many seaports we have to touch at the time of traveling? 2. Next, for carriage of passengers or cargo? Passengers. Next one, all the guidelines prescribed by the Ministry of Tourism and Ministry of Shipping required to be followed by that non-resident while operating these cruise ships in India. Clear? Second amendment also done. Sir, amendments are done because already we have provisions. Whatever the new rules or new circulars, notifications are coming, that is only we are going to discuss. Don't ask me, sir, explain 44 BBC. Already I explained many times. Okay, now. And in 44 BBC, this point is important. I think you know. What is that point? You can say. So, exemption under section 10 subsection 15B. I think all of you know. This is available up to assessment year 30, 31. This point also important. We can expect it as an MCQs. Now, third amendment we can start. This is an amendment related to, assessment of various entities. Assessment of various entities. That too, one of the entity we have in that chapter, business trust related amendment. Shall we start? CBDT amended. Income tax rule, that means one income tax rule is there, the 12CA now amended. Previously also we have this concept in our concept book. How that is changed we can discuss now. I think you know business trust means we have an real estate one as well as what ma infrastructural investment trust. So nothing but I think just I will give a brief idea about. I'm an unit holder. I can invest in business trust. Business trust will go and invest in what ma special purpose vehicles. Nothing but it is in simply Indian companies. So business trust mainly will go and invest in the special purpose vehicle, nothing but Indian companies. They are maybe real estate oriented or infrastructural oriented related investments only the business trust can do. Now, can you tell me who invested in whom? Unit holders are invested in business trust. Business trust reinvested that amount in the SPV. SPV means what? Special purpose vehicle, simply Indian companies. Nothing but that Indian companies may do the business in the form of real estate or infrastructural. Now, what is that amendment? Now, yes, first, business trust required to file these two form numbers. What are the form numbers? 64A, 64B. 64A required to submit to whom? Principal Commissioner of Income Tax or Commissioner of Income Tax. Who required to submit? Business trust required to submit form number 64A. What is the due date? 15th June of financial year. Yes, nothing but the following year in which income distributed. Suppose. Who will give the amount to whom? SPV will give the amount to business trust. Business trust will distribute that amount to whom? Unit holders. This is an investment pattern, and income distribution pattern is also in reverse way. SPV will give the amount to business trust. Business trust will give the amount to whom? Unit holders. So definitely during that previous year, suppose for our examination, what is the previous year? 24-25. In this year, business trust given the some income to the unit holders. Sir, nothing but in our, okay, 2 lakh unit holders are there. For each and every unit holders, how much income we distributed in the form of dividend interest. That all the things we have to send as a statement to the income tax authorities. What is the date? Next, that means income distributed in this year. Following year means what? Next year. What is the date? 15th June, that is 2025. Whatever that income distributed by the business trust to the unit holders during the previous year, we need to finalize as a statement during the previous year how much income we distributed to the unit holders, that we are required to submit as a statement to the income tax authorities in the form number 64A. Sir, how this will be authenticated? It is duly signed and certified by the accountant. Then only this is a valid form number under 64A. Then 64B also required to submit. 64B required to submit to whom? Unit holders only. But what is the date? To IT authorities, this is a date. But the same form number, sorry, that same details we have to submit to whom? Unit holder also. What is the due date? Unit holders, that is 30th June of 2025. After sending form number 64A to IT authorities, within next 15 days we have to send the form number 64B to the whom? Unit holders. These dates are very important. Same. This must be generated and downloaded from the Income Tax System Directorate portal and duly verified. Sir, ITR forms, how we are going to file? In the same way, you have to verify in the income tax website also. Sir, what are the form numbers? 64A, 64B. 64A, who will file to whom? Business trust required to file to income tax authorities. Next, 64B, business trust required to file to unit holders. The same thing Before amendment position, how it will be, I will show you in your income tax authorities chapter, in your assessment of various entities chapter. So, before that, this is in position, now these are all are changed. Okay. One more thing. Up to June, this is correct only. For December only, they are changed. Up to June means what? June exams, these dates are correct. But now, business trust related compliance changed form numbers to income tax authority is 15/6, for unit holder 30th/6. Here also the same. To income tax authorities to unit holders. Clear? Where we got an amendments, first if you know that, easily you can write it down. PDF already I uploaded in the free resources in our website. You can download it and you can read on your own also. Done? No. The fourth amendment. Fourth amendment. Shall we start? This amendment is related to return of income chapter. Okay. Already you know this amendment very well. Okay. What is the previous year for our examination? 24, 25. Assessment year 25, 26, right? Return of income due dates extended for this year or not in our practical cases? Yes, that is only CBDT extended the due dates for filing of income tax returns for the assessment year 25, 26. Yes, sir. Extended from the which date to which date? 31st July 2025. For whom? Non-tax audit SSEs or companies. Generally, what is the due date? 31st/7. That is an extended from 31st/7 to 15th September 2025. They will not ask in exam, but it is an amendment you have to remember. Done? No. In income tax, in return of income chapter, I given ITR forms, ITR 1, ITR 2, ITR 3. Yes, sir. If possible, I will open it. In our handwritten notes, clearly I given. In concept book also we have form numbers, ITR 1 to ITR 7 we have. Clear? This is an ITR forms. In that, we haven't some changes. What are the changes? Now we can discuss that. So, two things changed. What are the two things changed? ITR 1 and ITR 4 changed. That means Sahaj form, Sugam form. What is the change? Shall we start? Yes. First of all, who can file the ITR 1? Individual, especially resident and ordinary resident, who have an income from salaries, income from house property, one house property, income from other sources except casual incomes, agricultural income up to 5,000, and the total income does not exceed 50 lakh. They can file their return under ITR 1. Now they added, even though if any SSE have a long-term capital gain under section 112A, can you tell me long-term capital gain under section 112A, up to how much amount we can take it as exempt? 1,25,000. Transfer date nothing but 23/7/2024 after. What is it? So nothing but amendment is there after transfer done after 23/7/2024. Can you tell me for that previous year 24-25, what is that basic exemption limit? 1,25,000. I think you know that. Previously 1 lakh. Now for that entire year, what is that basic exemption limit under 112A? 1,25,000. I have a long-term capital gain under 112A, but that is less than how much? 1,25,000. That means I have a capital gain, long-term capital gain, but under section 112A, that is less than how much? 1,25,000. Do I need to pay any tax on this? No. Why? Exempt. So that's why we need to go for the other ITR forms. I don't have any other capital gain, like short-term capital gain I don't have, as well as long-term capital gain 112 also I don't have. Only I have an 112A. 112A capital gain on what assets? Listed equity shares, equity oriented mutual funds, equity business trust units. Now they clearly given as an does not have any brought forward loss and loss to be carried forward under capital gain. That means you don't have any earlier years capital gain head losses also. So that's why for you still you can go with the ITR 1 or ITR 4. All other conditions required to satisfy. What are the other conditions, ma? These are only. Simply they are adding, ma'am, some salaried employees are there. Okay, they are investing in the listed equity shares, equity oriented mutual funds, units of business trust. Just okay, some amount of salary they are invested in the that pre-securities, they held it as a long term. They are getting gain also. That gain is taxable under which section, ma? 112A. But that amount is 85,000. They are not required to pay any tax. Why? It is less than 1,25,000. Why we are required to follow ITR 2? Simply capital gain income, if anything is there, you have to follow what, ma? ITR 2. But clearly they are given some relaxation. No need to go with the other ITR forms. Still you can file the ITR 1 and ITR 4. Only one income they are added. What is that? 112A income. That too up to 1,25,000. Sir, if I have an 1,40,000, you can't file your return by using ITR 1 and ITR 4. You have to go with the what, ma? ITR 3 or ITR. Dana. Next. Amendment number 5. This is related to our search and seizure chapter. Especially related to block assessment. Especially related to what, ma? Block assessment. Okay. Remember, if you observe the block assessment in search chapter we covered, what is the starting step for the block assessment? Yes, I will tell you. SSC required to file the what, ma? Return under section 158 BC. We will send the notice to the SSC. SSC required to submit the what, ma? Return. Sir, before that they are not given any ITR form number for the how to file this return. They are given, yes, you have to file the return for the entire block period. So specified time not exceeding 60 days they given. But in these amendments they given the clarity about the in which ITR form they are required to file the return also. What is that ITR form? ITR B. 158 BC return. That means if any notice sent by the AO to that SSC for filing of return under 158 BC, SSC required to file return under which section, ma? ITR, under which form, ma? ITR B. And how that return shall be verified? I think you know, salaried SC's return, who will verify, ma? Himself. If he is an absent from India, then authorized representative. Like we have one concept in our return of income, verification of return of income. HE of return, who will verify? Karta. If Karta is an absent, any adult member, like provisions are there. Now here, who will verify that return which is filed under 158 BC under form number ITR P? Simply, tax audit SSC, company, political party file the return under these sections. Now, electronic electronically we need to verify by using digital signature. Sir, verification can be done by the many ways, Aadhaar enabled OTP, EVC, or manually also we can send the verification by using ITR-V. ITR-V form is there. Physically we can download it and we can sign on that paper and we can send to the Bangalore Central Processing Center. That is an ITR-V. But which method is preferable in this case, electronically we have to verify by using what, digital signature. For whom? Company, political party, tax audit assist. Remaining all. I am an individual. For me, tax audit is not there. Now how I will verify, Yes, you can follow above one also, or you can follow, yes, electronic verification code. Means what? Aadhaar enabled OTP through banking or through net banking or through ATM. By any ways also you can do what? Verification. Definitely this exam, in your exam, this amendment will be tested. Why? Last year they are not given how to file the, last attempt they are not given how to file this return at least. But now they are given form number also, how to verify that also they added. Dana, all of you? First amendment is what? Just we can recall it. First amendment is what? Section 37 PCBP, nothing but for these 4 acts related any default is done. If you are paying any amount for settlement of the disputes, that settlement amount is an expenditure for you, but that is not allowed as a deduction under section 37. 44 BBC, non-resident engaged in the business of cruise ships, he can declare the presumptive income based on 44 BBC. But additionally, if you want to declare the presumptive income under 44 BBC, they are required to satisfy some conditions given under Rule 6 GB. What are the conditions? Passenger ship requirement, OS requirement, purpose of operation, and other conditions required to be satisfied given. Next, business trust related amendment is what? They are amended the Rule 12CA. In that Rule 12CA, we have to file the 2 form numbers, Form 64A, 64B. Form 64A, business trust required to be filed to whom? Income tax authorities on or before next year, 15th June. The same file will be, statements will be filed to the unit holders also on or before 30th 6th of what? Next year. These are the amendments in business trust. Next one, ITR due dates are extended, and ITR 1 and ITR 4, one more point added. If any SSE having the long term capital gain under 112A, that is less than 1,25,000, he can file the ITR 1 or ITR 4 also. Next, electronic verification of what is that written? 158 BC written. Can you tell me what is that 158 BC written? Block assessment related return filed by the SSA. What is that ITR form? ITR B. Sir, is a relaxation of 1,25,000 eligible for all SSEs? Anna, please Anna. Now ITR 1 and ITR 4 can be filed by the generally some of the SSEs only. Companies required to file other ITR forms, Anna. Okay. While asking the doubt, please at least think twice also. ITR form numbers, relaxation for all. 1,25,000 relaxation is all SSEs only. But ITR forms related we have to, wait, where is this? You are asking the doubt, okay. Long term capital gain 1,25,000 relaxation for all SSEs, companies, HUF, AOB, BOA, AJP. But now I am talking about the, yes sir, ITR 1 only individual. ITR 4 individual, HUF partnership form. Clear? Companies required to go with that which ITR form? Companies. ITR 6. Next. Sixth amendment, amendment number 6. Just read that headings or read these words. Can you say This amendment related to which chapter, ma? TDS and DCS. No. In our discussions, we discussed this point in the advance tax and interest. What is that, ma? Advance tax and interest. No. Don't bother about it. Yes, you can watch twice or twice of this video. Easily you will get a clarity regarding each and every provision. Earlier, if you know the provisions, then it is an easy for you. But remember this number 201(1)(a). What is a 201(1)(a), ma? If you are failure to deduct and deposit the TDS, or you are not deducted the TDS, you are not deposited the TDS, then you are required to pay interest under which section, ma? 201(1)(a). You are failure to collect the TCS. Yes, you are failure to pay the TCS to the government. Now you are required to pay interest under which section, ma? 206C subsection 7. The two sections only now we have. 201(1)(a), 206C subsection 7. It is related to what, ma? TDS. It is related to what, ma? TCS. Interest we have to calculate under these sections, ma. Now, they are given the what, ma? Waiver of levy of interest. Already you know how to calculate the interest under these sections if any default done by the SSC. Now in the amendment they are given what? Waiver. That means they are not going to levy the interest. Department is giving the benefit to that SSC by using this amendment. Who given this? CBDT. So simply in Income Tax Authorities chapter section 119 we discussed the powers of CBDT. One of the power of CBDT is now relief of interest. Nothing but if any interest required to be paid by the SSC is there, for that interest who can give the relief? CBDT can give the relief. So 201(1)(a), 206C subsection 7 interest required to be paid by the SSC, but now who are given the relaxation? CBDT. And many are thinking that, sir, this much, no, not a big relief. I will tell you. From my bank account, I paid that amount already to the government. So today is a due date for payment of TDS. Nothing but whatever the tax deducted during this month, on or before next month 7, I have to pay to the department. Yes, I made the payment today. Money already debited from my account. But due to technical issues, after 1 or 2 days, or after 1 week, or after 15 days, that amount credited to the government bank account. Because of which issues this payment delayed? Technical issues. This relaxation also provided only for what issues? Technical issues. That means technically we paid amount, but that is reflected in government accounts after some days because of what? Technical issues. In these cases only they are given the relaxation, not in all cases. By way of reading the heading itself, they are given the use benefit. They are not giving any use benefit. Amount debited from our account, but not credited to government account. That's why they are given the relaxation. Clear? Now, purpose of relief. Why they are providing this relief? Yes, 201(1)(a). For what purpose? Delayed deposit. 206C7, delayed deposit of what? TCS. Taxpayer bank account debited on or before due date, but credit to the central government account is done on or after due date, because of which glitches? Technical glitches. To be honest, we paid amount also debited, but that is reflected in government account after some days. Because of that gap, don't try to calculate the interest under section 201 subsection 1A, 206C subsection 7. Done? Sir, why? I done payment. That is only in my control. After making the payment gateways will transfer the amount to the government accounts. That is beyond the control of whom? Taxpayer. Who can give the relief? Competent authority, who can give the relief, ma? Please check. CCIT, DCIT, PCCIT, they can give the waiver or reduction after verification. They can give them order. Sir, which authority can give the relaxation, ma? Simply CCIT. And above authority, ma? PCCIT. Next. This is the most important thing, right? Why? Many persons can think that, sir, automatically these authorities will give the relaxation. Nora, if you are applied, they will give the waiver. They will not give the sumo totally relaxation. They will calculate interest and they will collect the interest also. If you are asking with the relaxation, they will give. Application waiver. Application for what, ma? Waiver must be filed within what, ma? 1 year from the end of the financial year. So suppose previous year 24-25, 1 month payment is delayed because of technical glitches. Now from the year end, what is the year end, ma? 31st March 2025. From these, within 1 year, you have to make an application. Sir, if you applied, then only they will give an relaxation. Sumoto relaxations not at all there. Okay. If you applied, then who can give the relaxation, ma? Department. Now, department always will give the relaxation? No. If they satisfied, they can give relaxation. Otherwise, they will reject your application. Here I am using the word of dispose. Dispose means what, ma? Positive or negative also. Maybe they can accept your application. Maybe they can reject your application also. But within what time, ma? Within 6 months from the end of the month in which application received. Suppose here we made an application on 30th 8th 2025. Within time or after time, ma? Within time. That means within 1 year at any time you can send what, ma? Application. Now, application sent date or received date, we have to check. Received. That means you filed an application on this date and you sent, but that is received in the hands of department on 1/9/2025. We have to check what, ma? Received. Application received by the ID authorities. Minimum 1 or 2 days it will take. From this month end, what is that, ma? 30th 9/2025. Yes, within how many months? 6 months. Within this 6 months time, they have to accept or they have to reject your claim. Done? Sir, these are all are important for exam purpose. Now I will recap it. Very easy discussion. If you want, I will send the edited PDF also. Remember, anyhow, if payment of TDS, TCS is delayed, you have to calculate interest. But department saying that CBDT can give the relaxation of this interest under section 119 powers. Okay. Sir, why? Because of the payment gateway issues, if any payment is reflected in government account after due date. Now, who can give the relaxation, ma? These authorities. If you applied, they can give relaxation. What is that application time, ma? From the end of the year, within how many years, ma? 1 year. Okay. Then within how many days they have to give a reply whether this is an accepted or rejected, ma? Application sent date or received date? Received date. From that month end, within the 6 months, they need to give an point. Clear? Now, 7th concept, ma? It is directly given in our amendments content. Yes, not at all covered in our any one of the concepts, ma? Normally under penalties concepts, just we can use this word, but okay, we can discuss. FAQ on revised guidelines of what ma? Compounding of offences under Income Tax Act 1961. Can you tell me, what do you mean by the compounding of offences first? Compounding means what? Ra? Combining. Okay. If you are thinking like that, this amendment will be in air only. Ra. Okay. Simply I will tell you. Just I will open the concept book penalties chapter. Okay. Concept book penalties chapter. Don't think about it now. The two prosecutions now I want to check. Okay. Simply. Okay. TDS I am not paid, TCS also not paid. Then I have to go for what? Prosecution. Prosecution means imprisonment. How many months? 3 months to 7 years. 3 months to 7 years. Simply, in these cases, I can make an application to income tax authorities. I don't want to go for the prosecution. Yes, I will pay certain amount to you. That is only compounding of offense. I already done offense. Okay, I will accept it. It is my mistake only. But if I am applying to the some income tax authorities, they will give some amount. If you paid that amount, then that offense will be what? Compound. So that guidelines will discuss about it. Compounding of offences means nothing but a sum of all offences. That is not correct. If any prosecution is initiated against you, if you are applying to that income tax authority, by way of paying some amount, you can get relaxation from the prosecutions. Clear? Yes. Now, Hura, CBDT only again. Circular number, and they are given the one document. Revised compounding of offences guidelines they given. Now, first, there is no restriction of number of compounding offences. Array, under one section, first, I need to face this imprisonment. First, I made an application to that authorities for compounding of my offence. Second one, third one, for everything, I am making an application to authorities, please compound my offense. Is there any restriction on number of applications? No. They are clearly given that there is no limit on number of applications. Next thing. Previously, after initiating the prosecution or after giving the court orders, etc., 36 months limited period of time is there for filing what application. But now the 36 months also removed. There is no restriction on time limit. Now you can file at any time also if you want to get what compounding of offense. Next, all offenses including these two sections. Shall we take these two sections? 275A. Search related. 275A, if you are observing that 275A, search related contraventions done. Next, 276B. That means search related any prosecution if you want to face also, or TDS amounts related if any prosecution you want to face also, you can escape simply by way of filing the application to authorities for compounding of offences. Nowadays, maybe why they are given the clear guidance, many practical cases are having that issues like, sir, TDS we are not paid, or such related prosecution we are initiated. For these also, we are going for compounding of offences. Yes. Application may be submitted at any time after the offence. Even prosecution proceedings are what begin. Already prosecution means 3 months to 7 years. I have to go for what imprisonment. This prosecution already began also, no problem. You can go for what compounding of offences. Simple court given order. After the court order, yes, I am undergoing for that imprisonment. Now, so now also you can make an application for what compounding of offences. Next one, it is not considered as admission of guilt. You made mistake, whatever it may be, you are under prosecution, right? But if you are applying for the compounding of offences, that cannot be considered as I am admitting my guilt or guilt of misconduct or whatever it may be. If you are applying also, that cannot be considered as an admission of what we are taking some amount and we are giving the relaxation for the imprisonment and prosecutions, etc. Remember, for prosecutions only we can give the compounding of offences. Next, remember, charges, sir, how much amount we will charge in order to give the relaxation for prosecution? That is only charges based on sequence of applications. Sir, one application, one amount. If you are filing 3 or 4 applications, that means based on sequence of application 1 or 2, or in many cases 1.1, 2.1, 3.1 sequence also will be there. High multipliers, repeat requests. That means what, ma? Many times if you are filing the compounding of offences means you are in high multiplier. So in that case, they will charge more and more amount for giving the relaxation. Next one. Sir, how to make this payment? Can I go to that income tax department office? Can I hand it over the amount to the income tax authorities? No. This amount will be decided in an online, and this amount also you have to pay in an online by using the income tax website portal, and just check it out and you can file it, you can find an option of payment also. Next, this period can be extended. That means payment period now extended up to 24 months. Within this 24 months, you can make a payment without any interest. After 24 months, interest will charge. So this is a newly introduced concept in our CMA final. In CA final, this is a discussion, but in penalties chapter, just we will use the word of the compounding of offences in our workbook. Now, just this concept also you have to learn. Can you tell me compounding of offences means what, ma? If any SSC needs to undergo for the prosecution, in order to escape from the prosecution, he can file an application to income tax authority for compounding of offences. There is any restriction on applications? No. There is any restricted time? No. Next, what are the offences we can go for compounding of offences? Any offence also. Next one, ma, is there any time limit? No. Next, how to fix the amount we are required to pay, ma, based on sequence and the number of applications. How to make the payment? In online. Next, the payment period can be extended or not extended, ma? Extended. 24 months. Within the 24 months, you can make the payment without any interest. After 24 months, with interest you have to pay. In deserving cases only, not in all cases. Clear? Okay. So this I will give allocation to the penalties chapter. Penalties and prosecution. Now some students can ask the doubt, sir, compounding of offences related to prosecution, not penalties. Penalties at any cost you have to pay. If any prosecution, that means imprisonment, if any initiated, then I will go for the compounding of offences. Next. This is related to TDS and TCS. Section 206C subsection 1F. Previously also we have. If you observe our handwritten, yes sir, in TDS and TCS chapter, I given this section 206C subsection 1F. TCS, ma, nothing but seller and buyer. Who will sell the asset? Seller. Now buyer required to pay amount, along with the amount seller required to collect the what, ma? Tax. Here what is that asset? If motor vehicle sale price exceeds 10 lakh, then we have to collect the TCS on this amount at the rate of what, ma? 1%. Previously, we have in 206C subsection 1F. Simply, if seller selling the motor vehicle, each motor vehicle cost or sale price exceeds how much, ma? 10 lakh. On that amount, we have to collect the 1% TCS, right? Now, they are added the some more items to the 206C subsection 1F. So, list of specified luxury or high value goods they are added to this list. Previously, we have an only motor vehicle. Now they are adding these are all. Simple, right? Wristwatches, art pieces, collectibles, coins, stamps, ESMA, boats, arches, coins, helicopters, sunglasses, bags, shoes, sportswear and equipment, home theater systems, horses used for racing or polo. These are all can be used by the rich peoples like you only. So that's why these are covered under 206C subsection 1F. Can you tell me specified luxury goods? Not all luxury, specified. These are only specified here. What is the TCS rate? The same rate we are maintaining. 1%. Now, why this notification given? Are a high-end discretionary items or simply, if you are observing that many rich fellows are purchasing the wristwatches, I think you can see famous cricketers are purchasing the many high value of wristwatches, etc. I think Hardik Pandya wearing the nearly crores of rupees watches. And not only heroes and heroines also purchasing the handbags also with a worth of 1 crores and 2 crores. Simply they are investing the amount in that some luxury items, they are not paying any tax. In order to curb, these are all the things they introduced this provision. Simply at the time of purchasing luxury items, whatever the price you are going to pay to your seller, along with that price you have to pay the TCS also at the rate of 1%. That seller will deposit that amount to the government. Clear? No. The many students are waiting for this amendment only. Safe harbor. Now we have to start with the new amendment. What is that? Safe harbor rules. Can you tell me which chapter? Oh, super. And this chapter you know very well. What is that chapter? Transfer pricing. Okay. But you know transfer pricing chapter very well. But before starting off this safe harbor rules amendment, I want to talk about some points in this chapter. Okay. Suppose associated enterprises are there. Okay. One associated enterprise is a non-resident. Now there is a transaction entered by the two associated enterprises. This transaction now we can call it as what? International transaction. Okay. So maybe they entered into this international transaction with the actual transaction price, but this will not be accepted as per the transfer pricing regulations under Income Tax Act. We have to declare this transaction with the what? Arm's length price. Okay. First of all, who required to compute the arm's length price? SSC on his own, he required to compute the arm's length price, right? Who required to compute SSC. Suppose SSC is not computed arm's length price by using correct data or most appropriate method he is not at all used. Yes sir, computation mistake is there. In such cases, who will compute? AO will compute. That means ALP can be computed by SSC, then after recomputed by AO. Next. SSC entered into advance pricing agreement. These two fellows are not required to compute the ALP because in that agreement itself we can find the ALP. By using the ALP only we are required to file the return, and that return also will be accepted by whom? AO. Now, in our material just we given safe harbor rules as an heading only, but now they introduce the entire rules also into our syllabus. ALP we can compute by using the safe harbor rules also. Yes. So now we'll discuss the how to compute the ALP by using the safe harbor rules. Now, first I given as an heading, can you tell me safe harbor rules with respect to what? International transaction. I think after some pages, I given one more heading, safe harbors rules relating to specified domestic transactions. Okay, first we'll discuss the safe harbor rules relating to rules. Means rule 10TD is talking about the safe harbor rules with respect to international transaction. Rule what is that rule number? Rule 10TD with respect to international transaction. Then what about the specified domestic transactions? Yes, if any specified domestic transactions are there, that related safe harbor rules is given in which section? Which rule? Rule 10HC. Rule 10HC. THC. Okay. Now, first we'll concentrate on the rule 10D with respect to international transaction. My rules only, we are not referring act here, we are referring rules. One by one, I will explain you some cases also, how they will ask questions also. Yes, I am expecting 7-mark question from the safe harbor rules or MCQ. Okay. My CBDT is notified the updated safe harbor rules, not old one. I think in my CA final levels, there is a safe harbor rules in our syllabus. After that, they removed. Now, they are reintroduced in both CA and CMA and all levels. Okay. What is that rule 1010? Rule 10TD. For which assessment year? 25-26. For which assessment year? 25-26. These rules define conditions for transfer price declared by the SSE in respect of eligible international transaction that will be accepted by the income tax authority without any detailed scrutiny. Now, here I want to explain you more and more. But they are given some rules. First one, yes, like second and 3, 4, 5. Like that, they given some eligible international transactions. What are that eligible? We'll discuss one by one. In that eligible international transactions, if you declare the transfer price by SSE only, whatever the rules are saying, if you are following the rules and if you are declaring the ALP, that will be accepted by whom? Department without any inquiry. Now I will tell you one case. ABC Limited, it is an Indian company, is providing the software services to the, what is that, software services to the XYZ and Limited. It is a non-resident. Now, that is only first safe harbor rule. Provision of what? Software development services. Our Indian entity is provided the what? Software development services. It is an eligible international transaction or not? Yes. Generally, you can calculate ALP that can be recomputed by AO or you can enter into APA. But one more route is there. We can declare this value of transaction by using the what? Safe harbor rules. If I am declaring by using the rules guidance, that they will accept blindly without making any inquiry. Now, what is that point? Simple, if the value of international transaction is nothing but up to 100 crores. Up to how much, 100 crores. Okay. Second one, More than 100? Up to? Please remember these limits, you have to remember. 300 crores. Now, what is the price you have to declare? Yes, clearly they are saying minimum operating profit margin we have to add. Cost for us is there. For the cost we have to add the profit. How much minimum profit? 17%, 18% we have to add. On what? Operating expenses. Whatever that expenses you incurred, for that expenses, if that value of transaction up to 100 crores, what is the profit you have to add? 17% of that expenses. Next here, 18%. These are the percentages they will ask as an MCQ. Now I will tell you. Percentage how much? 17%, 18%. This percentage expressed on what? Operating expenses. Whatever expenses you incur for providing these services, on this minimum here you have to charge how much profit? 17%. Minimum here 18%. That means if you charge this operating profit, okay, this percentages on what? Operating expenses. That means from your side, if you are charging this profit, automatically the department will accept this what? Price. There is no detailed inquiry also. Yes, that is only clearly they are saying. Yes, if any SSC is declaring the eligible international transactions related price, income tax department will accept that price without any inquiry. So now they are giving eligible international transactions are given. Some 8 or 9 will be there. One example I given, has opted for the safe harbors option under Rule 10E. Simply, these rules are optional, not mandatory. Sir, even though I am eligible to declare by using the safe harbor rules also, can I go with these routes? Yes. If you want to declare, yes, you have to fill the one. You have to follow what is the rule 10E, which is not declared as an invalid. Whatever the valid safe harbor rules are there. Yes, sir. These are all our eligible international transactions. If you want to follow, you can follow. Otherwise, you can ignore and you can declare that ALP by using the what normal routes also. Now, one by one. Purpose of these safe harbor rules. Why? Simply, I am incurring some cost for providing these services. And I am adding the whatever the profit you are saying in that rule. Automatically, that is a perfect pricing only. There is no litigation here. Simply they are saying there is uncertainty and reduce the litigation by specifying the margin. Can you tell me here what is that margin they specified in that rule? 17% and 18%. Next, price ranges. Price range given or not? Yes. That means up to 100 crores value of transaction 17. 100 to 300, 18. If declared transfer pricing falls within the prescribed limit, that will be accepted by whom? Tax authorities. 1 point. Safe harbor rules are optional. If any SSE followed the safe harbor rules and they declared the price, that will be accepted by whom? Income tax authorities without making inquiries, without making any scrutinies. Now, one by one, I will maintain a notes. Okay. Here, these percentages, for example, just I introduce. Hereafter, for how many eligible international transactions are there, how to declare the transaction price also, I will discuss one by one. The first one in our discussion, provision of what? Software development services. What is that? Software development services. If any software development services are provided. Yes. Now, value of transaction, how much ma? So up to 100, 100 to 300. Value of, in shortcuts I will write it down. Value of international transaction. Can you tell me how much it will be? Okay, range. Transactions range up to 100 CR, more than 100 CR to up to 300 CR. Now, whatever operating expenses are there, for that we have to add the margin. How much ma? 17% here. Here 18%. Can you tell me this percentage we are calculated on what? Percentage of operating expenses. Nothing but we have to add the profit. This profit we have to add. This profit expressed as a percentage of what ma? Expenses. Percentage of operating expenses. Done? Now, okay, if you have an energy, what do you mean by the software development services? Next, software development services includes, exclude, but excludes you have to remember any research and development thing is there, that is excluded. In everything that will be excluded. In every services that is excluded, but I will suggest you try to remember the software development services word. But hidden, how we can remember this entire data, that is an impossible. But what is it? First eligible international transaction ma? Software development services. Sir, I am entering into the software development services with a 400 crores. Can I declare ALP by using the safe harbor rules? No, not possible. Why? Up to 300 crores only they given a permission of declaring the price under safe harbor rules. Up to 100, okay. 100 to 300. More than 300, not possible to declare by using the safe harbor rules. Clear? Now, second one, information technology services. First one is software development. Second one, information technology. Nothing but BPO services. My software development means within that our organization, whatever the applications are required, these are all the things we can update, and this isn't different. Both the things are different. But remember, the similar values we have to charge. Value of international transaction, how much ma? 100, 100 to 300. Minimum operating profit also what ma? Same. But I am writing it as a different things because software development services are different, information technology enabled services are different, but margins are same. Shall I write it down? What is the service ma? Information technology enabled services. Can you tell me value of international transaction? Value of international transaction. Can you tell me up to how many crores we can declare by using safe harbor rules ma? Up to 100 crores, okay. Next 100 crores and to up to how much ma? 300 crores. What is that profit we have to charge minimum? Here 17, here 18. How to calculate that profit as a percentage of what ma? Operating expenses. In exam how they will ask a question, I will tell you. If they want to test you as an 7-mark question, they will give you data and they will ask a questions. Yes sir. Simple, ra. If they added 20%, happy, ra. Profit, if they are added 20, happy. Minimum how much, ma? 17 and 18. Or it is a minimum profit. And one more thing. From our Indian entity point of view, we are providing the services to our associated enterprise. We are providing, we are not consuming. Are you understood, ra? While you are providing the services, expenses plus this minimum profit, you have to add it to your price. Understood, first two? Live vastunda. Now, next one. Next one. Please check. Third one. Provision of knowledge processing outsourced services. Okay, third one. What is that eligible international transaction, ma? Please read. Knowledge process outsourcing services. Knowledge process. What is that, ma? Outsourcing services. Sir, what do you mean by this? Yes, you can read, but always we can exclude the what, ma? R&D services including in that. We have to exclude. Now, but here one point they are given. This will applies only if the transaction value exceeds how much, ma? 300 crores. Ma, first two things, up to 300 crores only we can go for that safe harbor rules. But in that provision of knowledge process outsourced services, when we can declare the price by using safe harbor, if that value exceeds how many crores, ma? 300 crores. Now okay, ma? Here also minimum profit how much you have to charge as a percentage of operating expenditure, ma? 24, 21, 18. But in which cases, which percentage, ma? Employee cost relation to operating expenses. Suppose, ma, for providing these services, I have to incur what, ma? Expenditure. In that expenses, employee cost only 60%. Employee cost means what about labor? Or not labor, employees, that human resource. But if that employee cost percentage is 40 or more, but less than how much, ma? 60, but does not exceed 40. In these cases, we have to charge this much of profit on operating expenses. This is quite different. Previously, the transaction value up to 100, 1%, up 100 to 300, 1%. But now, this safe harbor rule you can take only if that value exceeds 300. But the percentages is different on knowledge process outsourced means nothing but employee cost is relevant. Employee cost to operating expenses, that means I'm incurring 50 lakh. Out of that 45 lakh itself employees only I'm paying as a salary. So that means more than 60. Here 40 to 60. Here below 40. What are the percentage? 24, 21, 18. Now we'll take the pointer. Can you tell me transaction value how much, ma? Applies transaction value exceeds rupees 300 crores. At this point only you have to remember, here we can declare only if the transaction value up to 300 crores, but here exceeds 300 crores. Now, here I am given the employee cost employee cost to operating expenses. Sir, entire operating expenses and employee cost percentage you can check. So employee cost to operating expenses ratio you can find it outra. If that is 60%, at least how much ma? 60%. Next one ma? 40, okay, less than 60. Yes sir, more than or equal to, less than 60, more than or equal to what ma? 40%. Next, less than 40%. No, remember here the transaction value fixed at a minimum level, but now we have to check which one ma? Employee cost to entire expenditure. Entire expenditure means rent, admin, all you can take. Entire expenditure to operating cost, please take percentages. Now minimum profit we have to add as a percentage of what ma? Operating expenses. Can you tell me percentage ra? First, here employee cost is more, 60%. So that's why here you have to charge what ma? More profit, 24. Next, here you can reduce to 21. Here you can reduce to 18. Sir, many students are thinking that these are examples. Not examples, sir. These only the rule. You have to remember that percentages. There is no shortcut also. There is no shortcut for this also. How many things are over? Software development services, information technology enabled services related. The same thing you can remember. Next, knowledge processed outsourcing services, if you remember. Yes, minimum transaction value if 300 crores is there, then only you can go for the safe harbor rules related declaring ALP. So now here percentage how we can charge, that is depending upon what my employee cost to operating expenses. Next one. Sir, first three things, we provided services to our AE. We provided our services to what ma? AE. What are the services? First one, software development. Second one, information technology. Third one, knowledge process business services. Okay. But next one ma? We are giving loans. Next one we are talking about what ma? Loans. Advancing loans. Here also, next one also what ma? Loans only. Now we'll take this. Our ABC Limited, Indian company, is giving the loan to XYZ Limited. It is a non-resident and associated enterprise. This loan is given or denominated in Indian currency. Now that is only the point. First, here that loan is denominated in which currency ma? Indian currency. Now please tell me here what is that point ma? Interest, how much we have to charge, that is only the point. We are charging the low interest in order to avoid the tax. You are giving the loan to your relatives, right? You will not charge any interest or charging the low interest. That is not correct. Now if you are charging at least whatever that interest rate given in safe harbor rules, that is an ALP only. Clearly they are saying interest rate for eligible intra-group loan must be at least, you have to charge how much ma? At least this rate. Minimum you have to charge. More than if you charge, that's okay. But what is you have to charge ma? Because that loan denominated in which rupees ra? Indian rupees. Ma, if you are approaching SBI any branch, starting day of the previous year, 1 year lending rate they will say. In exam also they will give you first year marginal cost of funds lending rate. Nothing but SBI only we have to take, not RBI also. In exam they will give you RBI rates also. But SBI at the year starting. Okay, now I am giving the lending in this year. First year this is only on this first day of the previous year. What is that? The MCLR rate. That is only marginal cost lending rate. Minimum you have to charge that one. Plus you have to adjust the credit rating adjustment. What is that credit rating adjustment? Now I will tell you. Okay. Here ma, what is that amount you have to charge ma? SBI, a marginal cost of lending rate as on the first day of the previous year. Plus margin you have to add. That is not sufficient. This is a basic rate, basic interest rate. In addition to that, we have to charge some more amount. Like this 6%, we have to add 2 more percentage we have to add. How to add? Now, for your associated enterprise, please take the credit rating. I think in your SFM subject also you know how to take the credit rating. Some credit rating agencies will be there. Now, many students are thinking credit rating of our organization or associated enterprise we have to check. Associated enterprise they will repay. So that's why their repayment capacity we have to check by using the credit rating. Now, remember, credit rating will be declared in that in these rates. Credit rating of associated enterprise. If the credit rating is A to A category, or nothing but ratings can be given in an alphabetical order. A to A category. What is the additional rate we can add ma? 1.75. 6% previously MCLR later. This is 6%. Now you have to add how much ma? If that is an AAA rating 2, how much ma? 1.75%. For this rate we have to add that 1.75. Minimum you have to charge this interest. Then that is an ALP. Otherwise we will not this interest as an ALP. You have to declare minimum the 6, suppose 6 plus 1.75. Next, interest will spread. That interest spread means the percentage will change for B, BBB minus, BBB and BBB plus category. What is that? 3.5. Risky categories. This is a better category. That's why additional spread 1.75 is enough. If credit rate is reduced, can you tell me that interest spreads will increase or not? Yes. There is a very good repayment capacity. This is an okay, good. It isn't bad. It isn't worst. That's why spreads will be increased. Can you tell me what is the next rating? BBB minus, BBB plus. What is the percentage? 3.25. Next category you can tell me ma? B2B. B2B. What is that ma? 4.75. Next, don't ask me how to remember. C2D. Plus 6.25. If you remember this, then only you will write an answers for an MCQ or questions also. They will not do huge calculation. They will not give you huge calculations in the question. They will ask a multiple question based on the case study given. Here SBI rate why we are taken? Because that loan denominated in which currency? Rupees. Now, next. Suppose that credit rating is not available. For your associated enterprise, credit rating is not available and loan amount, suppose if it is less than or equal to how much 100 crores, then spread will be how much 4.25. The credit rating is not available and loan amount does not exceed 100 crores, then you can add 4.25. Dana, my intergroup loan definition is given. Yes, you can check. Again, intergroup loan only we are discussing, but now what is the point That loan amount denominated in which currency? Foreign currency. The loan amount is denominated in which currency? Foreign currency. Shall we start? Now. Same thing. Same example. Our ABC Limited, Indian company is there. Yes, we are given the loan to our XYZ Limited. It is a non-resident associated enterprise. This loan denominated in a foreign currency, dollar. Now, here interest amount, how we can charge? Maybe we can charge, this is an international transaction, we can charge as much as low. But now, yes, this interest you have to charge minimum as per the safe harbor rules. That interest will be accepted as an ALP only. What is that amount? Now, remember, interest rate you have to charge at least this. Okay, I will charge. But here, which rate we have to follow? SBI rate? No. Reference rate of relevant foreign currency. If it is in dollar, one reference rate. If it is in UK dollars, one reference price. And different reference rates we have to take. But starting day or middle of the year? Middle of the year. So now I will take this as an reference rate. Reference rate of foreign country on what 30th 9 of previous year plus what credit rating adjustment. The same one but if that is prescribed in Indian rupees, we can take the SBI MCLR rate, but here they are describing it in foreign currency, so that's why foreign currency related reference rate, whatever that banks are there in that countries, that rate we have to take, plus we have to take what credit rating adjustment. Here one more twist is there. Credit rating of associated enterprise you can check but if the loan amount is up to 250 crores, loan amount is more than 250 crores, they are given the different spreads. Up to 250 crores loan, they given one way. More than 250, they given another way. Can you tell me on which date we have to check year ending? So year ending we have to check the what is that loan we given. If that is up to 250, this is an additional spread, and more than 250, this is an additional spread. Can you tell me? Here same or different Same. This category same. This category same. This category different. Here 4, here what 4.5. Increased. Why the loan amount increased? Other. Yes, we are maintaining the same. Here we are increased to 6. In Indian currency, if the loan amount given are denominated in Indian currency, simply only one spread we have to add, that is based on credit rating. If the loan amount denominated in foreign currency, yes, credit rating we have to check, but spreads are depending upon what amount of loan. If that amount of loan up to 250 crores, these spreads, and more than 250 crores, these are the spreads we have to follow. Spread means additionally we have to charge as an interest. Done. So first three things providing services. Next two things, loans given, but one is denominated in Indian currency, another one is denominated in foreign currency. Done. Now where we have to check the amount of loan also for knowing the additional spread if foreign currency. What is that amount? 250 crores less more than 250 crores. Done. Yes, sir. Next month. If you observe that, fourth one is nothing but what loan. Loan denominated in which currency? Indian currency. Next, fifth one, loan in foreign currency. So totally, how many things are over, ma? 5. Now sixth one, providing corporate guarantee. Guarantee means what, ra? Yes, nothing but if any other person is taking the loan, we can provide the guarantee. Simple. Same example we can take. Here we given the loan, ra, but we don't have that much of capability to provide the loan to our associated enterprise. But now what is that? Same example we can take. Our side ABC Limited is there, and this side XYZ Limited is there. It is a foreign company, and associated enterprise, it is an Indian company. We don't have that much of funds to provide the loan. Now they are taking the loan from the bank. For this loan, we are given the guarantee. That is only we can say corporate guarantee, etc. Now, sir, in practicality, if any person providing the guarantee, they will charge the fees or commission. Fees or commission. Now, how much fees or commission do you have to charge? Minimum we will charge what much? 0. Why? Because of love and affection we have with our related party. But in this case, minimum you have to charge. How much, ma? Fees or commission minimum we have to charge what, ma? 1% per annum of amount guaranteed. We given the guaranteed for the 10 crores. Now 10 crores into 1% per annum, at least you have to charge as an fees or commission. Or in your return of income also, if you charge it at least 1%, that will be accepted by the department without any verification. What is the percentage, ma? At least 1% per annum on what, ma? Amount so guaranteed. Now, this is also over. Yes, sixth one is nothing but what, ma? Providing guarantee. Dana? What is the minimum percentage you have to charge as an fees or commission? 1%. Now, first one, software development. Second one, information technology. Third one, knowledge. My first two things directly 100 below and 100 to 300. We are going to charge operating profit as a percentage of operating expenses. But third one is different. Knowledge processing outsourced services. Simply, these services can be eligible to declare ALP if the transaction value exceeds 300 crores. Now this operating profit margin is depending upon what, ma? Employee cost to operating expenses. 60, 40 to 60, below 40 percentages are there. Next we discussed about the loans to the our associated enterprise in Indian currency, in foreign currency. In Indian currency, simple. SBI at the year of starting, whatever that MCLR rate is there, for that additional spread we have to add based on credit rating. In foreign currency, okay, credit rating adjustment we have to do, but for which rate? Reference rate of that foreign currency plus credit rating adjustment we have to do. Credit rating adjustment can be classified into two. If the loan amount is less than or equal to 250 crores, 250, 250, more than 250. Next we discussed about the corporate governance. What is it? Minimum 1%. 1% is of the amount so guaranteed every year per annum this amount. Not for total year, per annum this amount. Next, contract for research and development services relating to software development. We excluded R&D from that software development. Now we are covering this. Clear? Now, just one point. In software development, what we remember the word. In software development, we excluded research and development related to software development. Okay, but what are that included? Debugging, converting, translation, application, and all. No, reverse. Yes, here we are concentrating on what, na? R&D. That means we are excluding what ma? Debugging and maintaining of software because it is covered in one already. Now, what is that ma? Here minimum operating profit, how much ma? 20% on operating expenditure. Here, this will be applies only transaction value does not exceed 300. First and second also same. Software services also transaction value does not exceed 300 only. 100, 100 to 300. Above 300, the percentages will not apply. Here also the same thing. The transaction value does not exceed how much ma? 300. What is the percentage ma? 24. Ma previously 17, 18. We discussed how much percentage for the software and information technology ma? 17, 18 percentages. But now R&D, that means we can charge more and more profit in the research and development cases. Now that is an 24% of operating expenses. Whatever expenses you incur for that expenditure, please add 24% profit. Done amma? Now, seventh one, research and development services related to software development. Here 1% per annum on guaranteed amount. 1% per annum on guaranteed amount. Next here the minimum 24% on minimum profit, 24% on operating expenses. Here you know already. Credit rating spreads you know already. That is a lengthy points. That's why I don't want to write it down now. Next, research and development relating to generic pharmaceutical drugs. Previously, research and development related to what ma? Software. Now, research and development services we are providing to them towards the what ma? Generic pharmaceutical drugs. Are simple. Medical medicines manufacturing company is there, that is located in outside India, that is our associated enterprise. For them we are providing research and development, nothing but Reddy laboratories, all others are there. For the related enterprises they can provide this type of services. What is the minimum profit they have to charge ma? 24. This is also applies, the transaction value does not exceed how much ma? 300. The same. R&D always same ra. That means the 7th and 8th one is talking about R&D. The percentages, the value of transactions also one are the same. Generic drugs means nothing but what ma? Already approved drugs. You are not inviting a new ra. That is an already approved drug. So we have to check the what is the dosage, strength, route and etc. Here also we are given the R&D services means what ma? Whatever the drug already is there, then we are redeveloped it as a new. Now, up to 8, just recap one. So, 8th one is nothing but what ma? Please tell me. Research and development services related to generic drugs. Ma, what is that? Minimum operating profit, okay. But transaction value does not exceed how much ma? 300 crores. Okay, these percentages you have to remember. Even though you have watched the class for nearly 10 or 20 times also, it will not at all useful. Now, ma, how many are there? 2 or 3 only there. Already we done majority of the eligible international transactions. Okay, just repeat along with me. First, software development. Second one, information technology. Third one, knowledge process outsourcing. This service is done. Next one, ma, loan. So loan in Indian currency, loan in foreign currency. Next one, provided guarantee. Next one, ma, R&D related to software, R&D related to generic drugs. Now, here we are manufacturing and export of core auto products. What is that, ma? Core auto. Next one, manufacture we are doing, and we are doing export to our non-resident AE, but these are what ma? Non-core. Or if core, if you know, then remaining all are what ma? Non-core. These are only core parts ma. Engine, transmission steering part, suspension braking parts, lithium, lithium and batteries. These are all a core. The remaining all what ma? Non-core. Or at least you have to remember these four: engine and engine parts. That is a core only. Transmission and steering parts, core. Suspension and braking parts, core. Batteries, core. The remaining all are what ma? Non-core. Or in core, what is that percentage we have to charge ma? At least 12. Here ma? 8.5 is enough. Simple ra? Ma, one company, that is an XYZ Limited is there. It is in India. They are giving the export to the ABC Limited. It is a foreign company. It is a non-resident associated enterprise. Here we are manufacturing some products ma, and we are doing the export. If these products are core products, we have to charge how much ma? 12% of profit on operating expense. Whatever that operating expenses are there for manufacturing this product, yes, I have to charge what ma? 12% on what ma? Operating expenses. Next one ma? Non-core. 8.5% is on operating expenses. At the time of filing my return itself, if I am declaring this ALP, operating expenses plus this percentage, operating expenses plus this percentage of profit, if I am given, automatically they will accept. Why? That is given in safe harbor rules. What is an eligible transaction? Manufacturing and export of core and non-core. At a core case, you can charge, you are required to charge more profit. Here, you can charge minimum profit of what? 8.5. So now, if you are observing that, I have to add the two more things. What are the two more things ma? 9th one, 10th one. Manufacturing and export of core, manufacturing and export of what are non-core. So what is the percentage ma? 12% of operating expenses, at least 8.5% of operating expense. Clear? Next ma, please remember last one. Be happy ra? Last one. Receipt of low value adding intra-group services. Here we are providing a received ra? Received. Ma, what is that? Low value services. Simply, services performed by one or more members of the MNC group, or a different companies are as a group. Nothing but this is an MNC, many associated enterprise are there. One group is providing some services to this group. That is only the receipt of what ma? Low value added means what? Services we are receiving. What are the services we can call it as low value added? It will be not a forming part of what ma? Core business, for supporting only. It does not constitute profit earning related. They given services, but because of that I am not generating any profits or profits earning, or not shareholder services, or not required to create any asset for that services, does not involve any risk also, control also. Simply, these are not main services, miscellaneous or ancillary services if you are received from that. Now, safe harbor rules applied if the total value including markup is up to how much ma? 100 crores, and markup how much ma? 5%. Markup means profit. Ma, in these low value added services if you receive, if you want to declare the price as an safe harbor rules related, what is that price ma? 100 crores including markup, or 120 crores safe harbor rules will not apply. Up to how much amount? 100 crores. And next, what is that markup also ma? 5%. Last one is what? Low value added services. What is that minimum markup ma? 5%. The value including markup does not exceed 100 crores. Now, up to now, this is your work only. You have to remember the percentages. But what are that eligible international transaction for declaring that ALP by using safe harbor rules? Totally how many things are there ma? Ma, 11 are there. Ma, in my classification 11. In some materials, we can easily combine these two as an one, these two as an one, sorry, these three as an one, and these two as a one. Definitely they can combine, but in our material they given 11, I am given in the same order. Okay, what are that ma? Software development, information technology, knowledge process outsourcing, loan given in Indian currency, loan given in foreign currency, providing guarantee. Next one ma, R&D related to software development, R&D related to generic drugs, manufacturing of core products, manufacturing of non-core. Next one ma, receipt of low value added services. Safe harbor rules are optional or mandatory? Optional. If you want to follow, you can follow. Now I will write it down. Yes, fifth point important. Exercise of option of safe harbor rules. If you want to exercise the safe harbor rules, you have to file and form what ma? 3CEFA. Important for MCQ. 3CEFA you have to file. When on or before due date of furnishing of return. Now, if you are opting safe harbor rules for 1 year, or I can opt for multiple years also. Sir, every year I am providing software services to my non-resident AE. So that's why 1 year you can opt, or multiple years also you can opt by way of filing this form number 3CEFA. If you want to opt 1 year, form this and on or before due date for the what ma? Relevant assessment year. Multiple years if you want to take, yes, first assessment year. First assessment year if you are filing this form, that's enough ma, no need to file for every year. Next, return of income, always you have to file before submitting what ma? This form number. Now, sir, how many years I can exercise these safe harbor rules by way of filing this? This option validity remains force in a period. The period specified in the form number 3CFA, or just I specified the 4 years in the form number, multiple years. How many years ma? 4. Or maximum how many years they are allowing 3 years, whichever is less. Finally, I can take that option only for how many years ma? Even though I filled a form for 4 years, I can take only for 3 years. Next, sir, I want to take safe harbor rules for the suppose 3 years. After 1 year, can I opting out from the safe harbor rules? Yes. You can opt out from the safe harbor rules any one of the year by way of filing just a declaration to your AO. Simply, how to take safe harbor rules? Simply by way of filing form 3CEFA. Before filing of the return of income. 1 year you can file. Multiple years. Maximum how many years? 3 years. Next. Ma, please take this screen. Please take. I think in this case, we have one point. Now, if you have more than one ALP, we can follow what ma average, and some cases we can follow that what ma range concept also. Here one tolerable deviation point we can check 3% of the actual transaction price is allowed as deviation. Now in case of safe harbor rules, the tolerable deviation point will not apply. If you are declaring the arm's length price by using the safe harbor rules, simply minimum profit we are added, that means 17 or 18, or minimum interest rate we are added. Any case also, whatever the price declared, that is final. There is no chance for taking the what ma tolerable range. I think you know 92D, maintenance of account, maintenance of document, 92CE, audit report submitted in case of international transaction. These are all mandatorily, even if you declare the price as per the what ma safe harbor rules. These are the points very important. Remember, what is that? Tolerable deviation, not applicable. Next, 92D, 92E are mandatory. Next, safe harbor rules does not apply. Straight away they given ra. Sir, I mean eligible SSC, eligible international transaction. I want to declare the minimum profit margin also. But for you, transfer pricing provisions will, safe harbor rules will not apply. When if your associated enterprise situated in 94A jurisdiction. What is a 94A ma? NJA, notified jurisdictional areas. Nothing but India doesn't have any effective information exchange mechanism with the specified countries. That countries only called as what ma? Notified jurisdictional areas. Now next one ma. That associated enterprise located na, in that tax is not at all there. Even tax is there also, that is low tax, that is less than 15%. In such cases, in these two cases, you can't declare the ALP by using safe harbor rules. I am eligible SSC, sir. Eligible international transaction, sir. Can I go with the safe harbor rules? No. In these two cases, you can't declare the ALP with the safe harbor rules. What are the first case, ma? What is the first case? If your associated enterprise located in an NJA, NJA made notified jurisdictional area, that is a 94A. Second one, ma? Second one, low tax, no tax. Low tax means what is the low tax prescribed in the pointer? Less than or a 5% tax rate only is there in that locality. That is less than what ma? 15%. No. I think in the DTA chapter, I used the word of MAP, Mutual Agreement Procedure, MAP, in order to prevent the economic double taxation. We are going to use the word ma? MAP. Now, MAP restriction. Now I will tell you. If transfer price is declared as per the safe harbor rules, automatically who will accept this price? Indian income tax authorities. Then SSC cannot invoke the MAP under double taxation avoidance agreement. Simply mutual agreements between the countries we can't invoke. Why? And I provided a services, software development services to USA company. Now I am declaring based on what ma? Safe harbor rules. Because what is the safe harbor rules in case of software development services? This percentages also I accepted and I added the minimum profit. Now between these two countries, USA and India, we can't invoke the MAP based on what ma? DTAS. Simply, if safe harbor rules if you followed, you can't invoke the what ma? MAP. Ma, and I can say one thing. Whatever the safe harbor rules are there, 11 points you can remember. At the same time, these 5 points also very important. What are the 5 points? The first one, how to opt the safe harbor rules. Form number 3 3CEFA. Multiple years you can take, 1 year also you can take, you can withdraw also when you have to file before the return of income. How many years maximum you can mark? 3 years. Next, tolerance range is applicable? No. Why? Whatever the margin they are given in the rules, you have to declare that margin, that is only ALP. Next, 92 records maintenance is same, and audit report and CA report also same. Next, in some cases safe harbor rules does not apply where if the entity is located in NJA. Yes sir, can you tell me your associated enterprise located in NJA, or in your associated enterprise located in a country, in that country tax rate is low tax as well as no tax. Low tax means less than 15%. Mutual agreement procedures also will not invoke if which will apply ma safe harbor rules are applied. No. Last, ma safe harbor rules now we have to discuss with respect to specified domestic transaction. Okay, we'll discuss after some time. Now, what is if you want to declare the price for the specified domestic transactions, here also option only. You can declare the ALP for that specified domestic transaction by using safe harbor rules. What is the form number? 3CEFB. Previously A. It is also optional, and the return would be filed on or before this, and the range concept will not apply. Sorry, not range concept, tolerable deviation points will not apply. 92 records are same. 92 audit report also we have to submit. Procedural points are same, and what are the safe harbor rules given for the specified domestic transaction not covered in CA. In CMA final they given this point also. In CA final they given only safe harbor rules only for international transaction. Now we have in our syllabus safe harbor rules for specified domestic transactions also. Remember, if any eligible SSE enters into eligible specified domestic transaction, whatever the price we are declared, that will be accepted by whom? Income tax authorities. How many eligible transactions they are given? 2 only. First one, supply of electricity, transmission, wheeling of electricity. What is the transfer price we have to declare? Tariff determined or methodology tariff is approved by the appropriate commission as per Electricity Act 2003. The minimum price. Next one, milk or milk products. Sir, price fixed on the basis of what? Fat content as well as solid not fat rates. I think in dairies also, based on the fat percentages only, they will give the price. Remember, the rate must be irrespective of. In public also, this is only the thing. I think if you have an idea about the dairies in your villages, if you are carrying the milk also, the price will be given based on the what? Fat percentage. They will by using the machines, they will measure the fat based on the fat percentages only. They will give the milk price irrespective of the quantity. Even though you are given the 100 liters also, based on fat percentage only, they will give the price. And the members shareholding percentage, voting power, these are all are irrelevant. Only which one is relevant? Fat percentage. One more thing, the prices will be definitely transparent and available in a public domain, and they will get list. Or if you are carrying the milk to the any dairy, Amul also, or anything, Tirumala also, or anything also, they will give specific price. So, okay, if this percentage of fat requirements are met, we will give per liter this amount. These are all the things are available in what? Public domain. So, these two not much important, but these procedural points are important. What is the form number we have to fill for taking the safe harbor rules? Next, what is a tolerable deviation points is not applicable if you are going with the safe harbor rules. 92D mandatory, 92E also mandatory. Clear up to now? No. Next one. This is one point they given in our amendments material, not much important, but I will tell you in a simple manner for 5 minutes. Listen carefully. PPT test. Sorry, PPT, that is nothing but principal purpose test. India and USA having the treaty, that is only called as what? Agreement. Our Mr. A entered into some transactions with the Mr. X located in where ma? USA. Many are nowadays entering into the transactions in order to get the undue advantage. This transaction they entered. Why they are entering into the transaction? They want to false within the treaty and they want to misuse the treaty benefit. How misusing the treaty benefit? I will tell you. If DTAA and income tax is there, both are applicable. Which one you can take, whichever is beneficial for you. Now, intentionally we are entering into the transaction. We are misusing the treaty benefits. That is only. Now I am given the, what do you mean by the principal purpose test? It is an anti-abuse rule. That means nothing but if you follow this principal purpose test, yes, abusing can be prevented. That's why anti-abuse rule. Yes, remember, this is aimed at preventing misuse of what tax treaties. Now I will check the, for this transaction, what is the purpose? I will check what for this transaction you entered with what purpose? That is only simply in order to take the advantage of the tax laws is only one principal purpose of the arrangement or transaction. Or this transaction you enter for getting only tax advantage, or you have any genuine commercial or economic reason is there, we have to check. Simple. I am given the loan to my associated enterprise. In return, whether you are getting any interest or you are getting the more and more interest, that all the points we have to check. Or if you are getting any amount from your associated enterprise, you are given the loan, that is okay. Just you want to take the advantage of these treaties, if you are enter, that is only revealed by the which test? Principal purpose test, simply. In God chapter also, this is only impermissible avoidance arrangement we can treat. IAA. Simply one thing, this is not important, but they given an amendment, that's why we have to discuss. They are not given this meaning also, added this meaning for understanding the what is a PPT. Or if any international transactions are entered, what is the purpose of entering, we have to check. Whether that entering in order, whether they are entering into the transaction in order to misuse the treaty or in order to get the benefits. If they are entering into that in order to get the benefits, okay. If they are entering into this transaction in order to misuse the treaty, that will not accept it. That is only how to apply the, nothing but this circular given, how to apply the PPT. Yes, ma. PPT as introduced into DTS through the MLI bilaterals. One more thing, right? India and USA have an agreement that is called as bilateral. India, USA and UK. Both three countries are entered into the agreement. That is only called as what? Multilateral. Two bilateral. Yes, sir. More countries are involved. Bilateral. That means, sorry, multilateral. That is also PPT. So nothing but at what stages they introduced the principal purpose test? In multilateral also, bilateral also. Now, just on this day they introduced the PPT test. Principal purpose test introduced on this day. We have to check prospectively or retrospectively. Prospectively you have to check. Already transactions done now. Further don't check anything. Hereafter you can check the what is the purpose of entering into the transaction. Purpose is misusing the treaty or purpose is getting the benefit. If purpose is getting the benefit, okay. For you getting some money from that international transaction, okay. Or if you are doing this transaction misusing the treaty purpose, this will not be accepted. Can you tell me prospectively or retrospectively? Now, sir, treaty may be denied. One of the principal purposes is obtain tax benefit. Are you entered into this transaction for what purpose, ma? Tax benefit getting purpose. Now automatically we can deny the what, ma? Benefit. This transaction we will not permit. And the grandfathering protection. What do you mean by the grandfathering first of all? before introducing any sections, if we made some investments, example I will say, long-term capital gain is completely exempt with respect to listed shares previously. Now, how much amount is exempt, ma? 1 lakh previously, before now 1,25,000 is exempt. Grandfathering means before introducing any provision, if you made investments, that investments are called as a grandfathering investment. Now we are protecting the grandfathering investment because of PPT. That means before introducing the principal purpose test, if any investments are done in these countries, Mauritius, Singapore, in all the cases, principal purpose test does not apply. Retrospectively we have to check, and hereafter you have to check. Before, if any investments is done, no need to check about that. What is a principal purpose test? Simply it is an anti-avoidance rule. Yes, both the persons are entering into the transaction. What is the purpose of the transaction? In order to misuse the treaty, yes, this transaction will be denied. In order to get some benefits, yes, this transaction is okay. Simply, what is the purpose of entering into the transaction? We have to check. That is only principal purpose test. Next, capital gain amendment. My important, definitely it can be tested in your examination. Within 5 minutes, we can close this session. Listen carefully. 54 EC. Do you remember anything? Can you tell me 54 EC? Section 54 EC. If you transferred any long-term capital asset of land or building or both, you will get a long-term capital gain by using the gross long-term capital gain. If you purchased long-term specified bonds, what is that, ma? Long-term specified bonds, which is redeemable after 5 years. Yes, these are previously NHAI and RECL is there. Now they added some more into this list. Maximum exemption, how much, ma? 50 lakh. Yes, ma. Simply, if you are transferring the long-term capital asset of land, building or both, yes, you will get a capital gain. Yes, if that capital gain amount is invested here, this will be available for whom? Any SSE. For all SSEs, this exemption will be available. Now, what is that amendment here? This list of these investments increased. Previously, we have an NHAI, RECL, bonds of power finance company, NDA, railway finance related bonds, ma. Yes, nothing but NHAI, RECL, PFC, IRC. But now what is that added, ra? Ma, these two added as an amendment only. But again they added one amendment. What is that, ma? Housing Urban Development Corporation related bonds. What is that, ma? Housing Urban Development Corporation bonds if you purchase. These are also redeemable after how many years, ma? 5 years. That's why we can call these as a long-term specified assets. Now finally, how many, ma? 5. NHI, RECL, PFC, IRFC. Next one, ma? Housing and Urban Development Corporation bonds. Next. In TDS chapter, we have an 194 EE. Previously, we have an 194 EE. We discussed also in regular batch. If any amount paid by the person to that individual or HUF, that is a national savings scheme amount if you are paying, then we have to deduct the TDS at the rate of 10% if the payment amount more than 2,500. This section removed now. This section removed now. Shall we discuss that? Yes. No TDS. payment of amount referred on national savings scheme which is withdrawn by the SSC being an individual. If any individual withdrawing the amount from the national savings scheme, even though that amount is more than 2500 also, not required to deduct the what ma tax. Now this section is removed in the amendments. No TDS is required. Next. I think one amendment already you know in a return of income chapter. At the time of applying your PAN number, you have to quote the Aadhaar number. Previously, you can quote what ma Aadhaar enrollment ID also. They discontinued the quoting of Aadhaar enrollment ID. Ma previously, if you want to apply the PAN, in that PAN application, we have to submit Aadhaar number. Or we can submit Aadhaar enrollment ID also. But they discontinued the Aadhaar enrollment ID on or after this data. This amendment already we have in our book. But now, what is the change? Last year or before last year, many SSCs are applying the PAN based on what ma Aadhaar enrollment ID only. You have to submit Aadhaar number. If you don't have Aadhaar number, you can apply for Aadhaar and you can take the Aadhaar enrollment ID like provisional and you can submit. But in order to decrease the fraud cases, they discontinued this Aadhaar and enrollment ID in the PAN application. At the time of PAN application, previously you can quote anyone. But now they discontinued what ma Aadhaar enrollment ID. But last 2 years, 3 years back, many are declaring what ma Aadhaar enrollment ID only, right? All these fellows required to update their Aadhaar number. Yes, sir. They are required to update their Aadhaar number to these authorities on or before what date ma 31st/12 of 2025. So nothing but in this year up to December month ending, whoever submitted earlier Aadhaar enrollment ID, in that place of Aadhaar enrollment ID, they are required to replace what ma Aadhaar number. Dana. Now last amendment. As per RBI guidelines, every non-resident or foreign company required to set up a licensing office in India. So licensing office means nothing but they cannot do any sales activities. They can do only research and development like marketing and product exploration, advertisement activities they can do. Now, every non-resident having the licensing office in India, they are required to submit one annual statement under section 285 in form number 49C. Within that, 8 months from the end of the year. So, this year ending on 31st March, right? Within the next 8 months, you have to submit the annual statement in form 49C. I will show you in your concept book. This will be there in your liabilities in special cases. Liabilities in special cases, section 285. In June attempt, they given this section. Yes, sir. Form 49C, but they are not given the anything. What is the time limit for submitting this 49C? They are not saying anything for June attempt. They are saying previously last year we have 60 days. This isn't removed, and they are saying within the prescribed income tax rules. Now they are adding what is prescribed in income tax rules? 8 months. Last year, yes, what is the time? 60 days from the end of the year. That is removed. For June attempt, they are not mentioned anything. Just they are saying within the days, within the number of days fixed in the rules. But in our amendment, they are given the clarity also. What is the number of months? End of the financial year within 8 months. Now, mainly these are amendments are there. If you prepare this amendment, at least you will score 10 marks from these amendments only. Now, just one by one amendment heading only I want to tell you which one you have to concentrate most also. So 37 they can ask you. Sorry. 37 definitely they will ask you in an comprehensive question. Question number 2 maybe trust, or they can ask you PGBP total income. They can ask you for 1 or 2 marks in this. 37. Next, cruise ship amendment, definitely they can ask. My business trust, form numbers and dates, just remember, not much important. Just form numbers and dates. Yes, these due dates and this is also important for MCQ purpose. What is that added? Long-term capital gain 112 up to basic exemption limit. If anything is there, yes, you can go with the ITR 1 or ITR 4. This is also very important. Block assessment related return and which form number and how to verify that return. Next, this is also somewhat but not much. But remember, in which cases we can go for waiver of interest under 2011A, 2067 and how to make an application and within what dates you can get an reply from the department also. This dates important. Next, compounding offences. Yes, just if you understood the concept enough. Sir, compounding of offences for prosecution or penalty? Prosecution. How many times? A number of times. Time limit? No time limit. All offences also go for compounding. How to make the payment? Online. The payment time limit extended to 24 months without interest. After 24 also with interest you can pay. Next. Very important. What is that? TCS. Previously motor vehicles only there. Now they are adding a list also. 206 subsection 1F. Safe harbor rules, international transaction. Safe harbor rules with respect to the specified domestic transaction. Can you tell me safe harbor rules related to international transaction rule 10D, safe harbor rules related to specified domestic transaction rule 10 HC. But what is that form number we have to file? Form 3CEFA. Here form 3CEFB. Can you tell me in these cases tolerable deviation applied? Not applied. Here also tolerable deviation not applied. But 92D records you have to maintain and 92U report you have to submit. Here also the same thing. Next. Next we discussed the principal purpose test. Just remember, not much important, but you have to remember what do you mean by the principal purpose test. Many SSCs are entering into the transaction in order to misuse the treaties. So now we can check what is the purpose behind entering into this transaction. Genuine, okay. Not genuine, we can give the deny the benefits of what transaction. Next one, long-term specified assets related 54 EC list extended to what previously we have 2, now they are added 3. Latest they are added 1 more also. What is that? Woodco. Next, 194 EE removed. Next, Aadhaar enrollment ID previously if you submitted, now you have to replace. Last one, non-resident having the licensing office, they are required to submit the 49C to that income tax authorities within the 8 months from the end of the financial year. These are only the amendments are there. That's enough and thank you.